Way. It takes a bit longer than anticipated because it's a lot of data, but yeah, it's going to be worth it. All right. So yeah, dashboards are up right now, but we'll have the other strategies like the turtle, the most profitable one. We'll have that running in a couple hours, hopefully. Bitcoin is actually done. I'm waiting for ETH and for the other coins as well. All right. Let me just go ahead and go to our resources and open the sheet, because what we're going to do today is we're going to live trade and live backtest a strategy. If you guys have any suggestions for a strategy, let me know. Otherwise, I'm just going to pick one that I feel like backtesting, something that I haven't done myself yet, which would be probably the closest estimate to you guys, if you haven't backtested a strategy yet, right? And the importance of backtesting a strategy is something that you guys have heard me say probably 50 times, right? So I'm not gonna go too deep into that, but essentially, it goes all the way back to the core market principles of how a market works in the first place, right? If you have some people that make money in the market, meaning that consistently take out profits from the market, which is either, individuals or institutions, companies, whatever, that means that there has to be consistent cash flow of, a pretty sizable chunk of money flowing from one direction to the other. And the money is never just generated, right? It's a zero-sum game, trading. So someone needs to constantly lose money. How do you make sure that many people can constantly lose money while they're still happy to do that? Well, what you do is you give them hope in the form of, a couple amazing trades, whereas they don't, recognize, or they justify the slow bleeding that will bleed out the account. Right? And it could go both ways. You can have like a couple huge wins and then your slow losses, like small losses, continue like constantly, or you can have small wins constantly and then one big loss. Either way, you just justify that loss for XYZ, but at the end of the day, what it just means is that you are not able to be consistent in the market, which is not something that's easy to do, but it's something that we teach here, right? Once I send you guys the dashboards, all of you will have separate logins, and I encourage you to look through them, look through the bundles, the strategies that are in the bundles, and then look through the separate strategies together with descriptions of them, and that will give you a pretty good estimate about how the strategy works, and so on and so forth. So my favorite one is the Bitcoin bully, because it's just the most consistent strategy. It's a trend reversal strategy, and something similar to what we're gonna trade today. Possibly, actually, today it's going to be a trend following strategy that we're going to trade. And it's not really a strategy that I've been trading before, but I have been kind of looking at it during our calls, and it's interesting enough to me to backtest it with you guys. All right, so yeah, I probably don't have to cover this anymore, right? And then you also have the simulator, where you can look at their actual performances of those strategies. But yeah, essentially it's like 2,000% bundle one, right? So it's doing pretty well. without leverage. So, all right, let's just go into that and do that. But so far so good. Everyone understands why we're backtesting something in the first place, right? I have been, reiterating that many times over, but just to make sure, I'm gonna make a new copy here. I am using TradingView. Because I'm gonna delete everything there is here, so we can actually do the backtest. We'll do it on Bitcoin. We'll keep these indicators, and I'll keep this indicator too, and then I'll add an averages, and I will delete everything else that's here. Oh, okay, never mind. All right, so the strategy that we'll be backtesting today is going to be a MA cross, right? So moving average cross and stochastics confirmation. We traded this during the challenge. We did that for a couple days, and I just ran it a couple times, and it seemed to have pretty good potential. So we're just gonna go ahead and try that out. So what I'm gonna do first is I'm gonna just squash the price completely, so I don't know what's going on. I'm gonna move it down like this and go like way back. I'll go to I'll just go to 2022 November 10th, so a year ago. All right, this is something that I've seen already, so I'm just gonna go ahead, press replay here. Okay, so now we got the replay. We're in December 22, and now if you have been trading Bitcoin a lot, then you might have some indication of where the price is going to go, but I think that you guys, when it's your first backtest strategy, you'll be fine with the bias. I'll add in the stochastic, I'll add in the RSI, I'll add in the moving averages. What is this, MA cross? Is that the one I had? Yes, that's the one I had. And it was like a 200. Damn, I really don't remember what I was using, but it was good. I think it was this. Yeah, that looks pretty good to me. And yeah, I think that's what I'm gonna do. All right, so let me get the template that I made for you guys, and let's do this. We'll see how many. I'll make copy. MA cross backtest, and this is great because we'll go over this manually, right? And then on another call, I'm going to show you how we can do this automatically, right? But we cannot automate this, or use the software that we've coded internally to do that, which will give you reports like the ones that I showed you yesterday, right, with the PDFs, and also overall VAMI, Sharpe ratios, all of that. But if we don't understand what's going on in the first place, we won't be able to really get the full benefit out of that. All right, guys, so notes about the test. What are we going to do? Let's see. So we're testing MA cross strategy, indicators. We have the MA cross indicator, and the settings are 20 and 200, I think I did. And this is just me guessing right now, but I would assume that you guys would do something specifically for your strategy. I'm doing this strategy as an example, right? But if we did our stochastic range trading strategy, it would kind of be the same thing, right? First of all, we write down the indicators that we have here. So we have the MA cross, we have the stochastic, and we have the RSI. That's all I'm using. And rules, it's going to be entry MA cross plus stochastic and RSI over bought / oversold, depending on the direction, obviously. And TP and stop loss is going to be always mid of range, top of range, best case. So that's usually next range, and then stop loss is going to be in invalidation, and exit is going to be opposite side signal or MA cross. Okay, let's see if this guy this makes sense for you guys. So we have the MA cross strategy. That's just what I called it, right? I'm literally making this up on the spot. The indicators that we're going to use is the MA cross indicator, right? So we have two moving averages, a bigger one and a smaller one, and we're waiting for the smaller one to cross the larger one, indicating a smaller, shorter term trend, because our smaller average crossed our larger average. And then we're looking for confirmation of our oscillating indicators, indicating that we're currently at the bottom or top of the range. Because if we cross the moving averages and our stochastics are giving us a push towards our direction, then the likelihood of that happening is higher, right? And then the take profits and stop losses we're setting are going to be our expected scenario, and based on the expected scenario, we'll have a very likely scenario, and then we'll have a best case scenario. And our stop loss is going to be the invalidation of our theory of that trade, right? So theory of strategy, and this is essentially our thesis that we're testing, right? And as we're trying to use as close as possible the scientific method to do this, right? We're trying to isolate the variables, try and test our thesis, and then based on the data that we get on our thesis, we will then be able to improve on it. However, because we do it manually, we're there while the trades are happening, and that allows us to get a lot more insight, so the next iteration is going to be that much better. Does that make sense? So the theory of our strategy is that if the smaller moving average crosses the larger MA, we indicate a short-term trend that we can capitalize on. On top of that, we use oscillating indicators that are abstractions from averages themselves, which will give us another perspective or dimension on the current market situation and trend. That's our strategy, right? That's our theory. All right. So that's what we're gonna do. I will try and format this better. Honestly, I just can't get myself to do this. If any of you guys want to take the sheet and format it in a way where it's looking nicer than this, then please be my guest and send it to me, and I'll just use it that way. And I'll update the resource link, because it's a pretty big pain in my eye to look at this. And all we're gonna do is Bitcoin USDT. All right, so that's it. We will go here. Settings here, I'll do a 1416 just based off of experience, and the RSI I will leave as is. Maybe I should note that down to 1416. Okay, let's do this. So now this would have been a long, this would have been a short, this would have been a long, and all of them would have looked pretty nice, right? However, what we're looking for is indications that, well, the times where it doesn't work well, right? And really what I should do at first, actually, when I look at this now, is make sure that the stochastic actually applies here. Right, so what I'm doing right now is actually not fully correct, because I already added 2 more filters into the strategy where we haven't even tested the first one, right? So the chance that the first one by itself will work great is relatively low. So I just, skipped a step ahead and added in other confirmations, but those might not be the fitting confirmations for the strategy. Right, so we're not really isolating the variables because we're testing 3 at a time. So what I'm going to do is I'm going to, not include the stochastic and overbought. I'm going to put it in brackets right now, because I will go based off of the MA cross for the first few trades, and then I will reevaluate based on those trades how much sense it makes to use these indicators, because maybe volatility indicators aren't the correct ones. Maybe we need to use trend following indicators, which would be a confirmation with the MA cross, right? So this is something that I'm going to be looking at. Okay, so let's go. Let's do this. Can you guys hear me okay? Like, my laptop's lagging a bit because I got the pre-processing in the back end, but I just want to make sure that you guys see everything and my laptop's okay with everything that I'm doing. Just let me know if you're good to go. Yo, Cypher, what's up, my man? Just give me a confirmation that you can hear and see. That's all I need from you guys. Cool. All right, so let's get started. So now I'm replaying, and I'm just so essentially what I'm looking, because this indicator is like a strategy or something, we get these blue crosses, so that kind of does the hard work for us, and I don't need to look exactly when the cross is going to happen. But I'm just going to go candle by candle, and the cross is going to happen somehow here. So this is a cross, right? The price is below, and we essentially retouched this. Now I can see directly based on the trade that I've seen here and the trade that I've seen before, that we're kind of retesting this level during that cross, and that can indicate a continuation to our side, right? So right now we crossed, right, and we did not fully touch that level yet, but I might assume that we might touch this level, and this would turn the indicator down. And by the way, I'm looking at a 3-hour time frame, which I don't really want to do. I'm going to look at the 15-minute time frame, because we will get more trades. And okay, here it makes much more sense with the stochastics there. All right, so let's just start here, and I'm also going to use the replay replay functions here. All right, damn. Laptop's dying. All right, let's get going. All right, looking for cross. It's gonna happen possibly soon. And I know, there we go. There we go. Okay, so we're holding above the level here and now we crossed. Okay. So let's see. Okay, so now we crossed. Our 15-minute was bottomed out going up. Our RSI is going up and we just crossed into a long. So I'm just gonna go and enter a long here, and this is gonna be my first trade. So this is where we'll start, analyzing the strategy. I'm gonna set up a long here, and I'm gonna, okay. So number one's right here. And where am I gonna set up the take profit levels? So first of all, we have a range where we're ranging right here. Okay, that works finally. So I would assume this is the top of the next range. This is the top of the current range if we assume that we're going here. So top of the range would be here, and the middle of the range would be here. So this is our first take profit, our second take profit, and then our third take profit would be up here, and then we can possibly go further up, but we will see that. And then our stop loss is relatively tight. It's below this level, right? So if we get wicked out, we get wicked out here, because that's the strategy, right? It's possible that we might do 5 trades now and we'll get stopped out 5 times, but then we have data to build off of, right? That's the thing, you never start from scratch. You always have data that you build off of. So what I'm gonna do is I'm gonna press 10 buys here. So I basically split up my position into 10 pieces. So whenever we hit a take profit, I can take out 20, 30%, whatever I wanna do. So I'm just gonna do that, go to 10. And now we're starting the first trade. Here we go. So we're ranging around, okay. We kind of did not quite hit the take profit level, right? So this might be, if we just dump down right now, this might be something to note. We're going higher up. Down, we're still kind of ranging. My 15-minute here is ranging around 2. What I would love to see right now, because I want to see this, is what the lower time frames are doing for me. Are they in my favor? Okay, so this is bottoming out, and the 30-minute is going further down, and the 1 hour is going further down too. So not very much in my favor here, but hey, we're just testing our first couple of trades. So I'm just gonna let it, I'm not gonna intervene whatsoever. I'm just gonna wait for this to play out. Our TP1 would have almost been hit, but based on a level that we set it at, without adding any new rules, right? Because we need to specify everything. We did not take profits here. So let's see, we're still waiting. And also something's going on with my MA here. Let's see. I have no idea why my MA is not loading. Just reload this. It's a pain in the ass with the processing, I'm sorry, but I'm not gonna stop it now because I don't really feel like doing this for the next whatever. Okay, so the time we're going to is here. Let me just flip there. And we had our replay I have no idea when we were replaying. Do you guys know when we were replaying? Alright, well, whatever. Alright, we'll just start again, I guess. I have no idea why the fuck this happened. Okay, so our first trade is just gone. I think this just has to do with my pre-processing being completely messed up. Okay, so now we're looking for the next cross on the 15-minute. See, one more. There we go. Where's the blue arrow? And you know, we're assuming, by the way, this is important, because we're backtesting this, right, on a 15-minute time frame, the only times we can enter is after the 15-minute close, right? This can flash within the open candle. We cannot do that. We're not gonna enter that, right? We need to wait, you know, because, you know, in backtesting you only have the closed candles. All right, so here's our entry. This is range 1, this is range 2 right here. Range 1 is here. Half of the range is essentially this wick right here. And then top of the range is here. And our stop loss, it could be pretty low. I would assume that we could go this high, this low, but you know, I really don't like this risk to reward. But you know, we just want data at this point, right? So let's just see. We might cross again. Oh, kind of saved it. Okay, so TP1 hit. And I did not do the entries here, so I'm just going to do that real quick so you guys see the P&L. So at this point, at the close of this candle, I'll put in 10 buys. I'm taking 30% on every TP. So TP1 will hit here. Now, you know, do we do stop loss to break even? We don't know yet, right? We have not set that yet because I'm doing a completely new strategy that I've never traded before. Okay, there we go. So we hit it. And now when I take profits, it's not, you know, it's at the close of the candle, not at this level, but hey, you know, 1, 2, 3. Okay, made 500 bucks here, great. Let's keep going. A stop loss to break even would be too tight here. You know, if I was trading this and I hit TP1, I would put my stop loss to this level for sure, right? But we have not added in any trade management yet. But this is like immediately after hitting this TP1, I took out 500 bucks, putting the stop loss to here, which is smaller than what TP we just did, right? But we just keep going here. Okay, TP2 hit. Nice. So I'll take out 3 again. 3. Okay, keep going. Again, I'm just going by my rules at this point. Okay, and we dropping down. At this point, stop loss to break even makes perfect sense. But we have not set that rule yet. So now we're just waiting for either the stop loss to hit or the MA to cross again. There's 2 options that can happen. Otherwise we would stay in this trade for essentially forever till we hit. And honestly, what would make sense as well, just take this as the stop loss, the MA. Okay, still in. Okay, oh, did we hit it? Just about didn't. Oh man, this is annoying. We just about didn't. Come on. All right, here we go. TP3 hits. 1, 2, 3. Nice. Made 4 grand. still in a trade, right? And at this point, the last 10%, we just let it fly wherever it goes. We either hit the stop loss or we will hit the MA cross. But at this point, what I will note after going through this trade is definitely a stop loss to break even after TP2 makes sense to me. And also trailing stop loss to the ranges, right? Which I will probably add in later as well. So now we just keep going. Keep going. Just letting it fly here. Damn. Alright. This was a good trade. But, you know, this is why it's important to do many trades too, you know. We might have just been lucky and gotten a good trade for the first trade. But, you know, there can be a million other trades that can break. Alright, this might look like we're getting to a close here. Notice how we didn't take profits here, which kind of sucks. Something to note. But there was no rule, right? And this is important because if we would just trade at this, we'd probably get excited here, we'd get excited here, you know. We would just take profit, manage our trade without any thinking whatsoever, which would, you know, over the long term destroy our trading. Because if you don't have any plan on a positive trade, you definitely don't have a plan on a negative trade. So like every move or every action, every profit that you're thinking of, you need to think about an opposite reaction, right? So essentially the other side. I was talking to Saifa today, and yesterday he was trading and he had like huge profits, right? And I told him, like, you know, huge profits are just as alarming as huge losses. It's the same thing. It means high volatility in your strategy. And that's a problem, because the fact that it's just profitable, like, that's just chance. Like, you have two sides and it happens to be the positive side. But if you don't have a management system where, you know, an oscillation like this happens, it can just as well happen on the downside. You know, usually it happens through over leveraging, through over trading, but, you know, there can be other reasons there too. All right, finally, we hit our first exit just here, okay, which we flattened to this point, made $5,000, amazing. And this, coincidentally, will be our second trade, because that's our strategy. So our strategy essentially means, the way we have set it up now, is that we're always in a trade. We're either long or either short. Okay, let's analyze this trade. Do it like this and like this. Just the top of the trade here. But we did not take profits there. Okay. So, you know, ended up being a good trade. We made $5,000 on the price movement, which was essentially $5,000 equal to and this is essentially 10x, right? So $500. So like 2% or 20% if we did it 10x. Maybe 20%, great. So now let's analyze the trade. Entry made sense, right? Our exit levels make sense. Let's look at the stochastics. When we crossed this level, and this is something that I was thinking before, our stochastics were, well, we can't really justify it as bottoming out. Really what it was doing was going down, right? It was going down, and we did have, you know, some movement down, and the bottom of our RSI and our stochastic ended up being the bottom of this range before it started moving up. So this makes me think, okay, well, maybe it might make sense to have this cross and then wait for our stochastic and RSI to bottom out and then go up, right? Maybe, right? See how those are all questions yet? Because we just looked at one trade. I cannot set any definite, theory based on one trade. It's statistically insignificant, right? That's why I'm saying we need to do 20, 30, 40, 100 trades. But if you do it like this, I promise you, you will be so much better in trading than anyone else. Because no one sits on their ass and actually does this, which is just crazy to think about, because you have the data here for free, right? All right, so there's that. Let's put this in here. So entry was Friday, May 26th, 1:15. There we go. Time of entry. Forgot. Friday, 26th of May, 1:15. Friday, 26th of May, 2023, 1:15. Perfect. Our entry price was the close price of that 1:15 candle, which was 26493.96. 26493.96. Our stop loss, I can just double click here to be honest and look at that. Our stop level was right here. Just paste it in. Our TP1 was at 2662498. 6624.98. Our TP2 was at 2672672. 26726.72, and then TP3 is a bit higher, 2718452. 27184.52. And as you can notice, looking at this trade, the TP levels that I set are way too low, right? There's so much more movement that could have been there. Is this a fact that I should do in general? I have no idea, because this is one trade. But if I do 20 trades and like 15 of them, I should have put my TPs higher. Well, okay, well now I know, right? But I cannot do a definite decision off of this one trade. Now our full exit price was here, 27713.43. And the time of our full exit was at the 30th of May, 1645. May 1645. And this is interesting as well, because this trade took 4 days, 4.5 days, right? Also, something to note, because we just did this within the span of a couple minutes, but you will need to be sitting here for 4 days in order to make the $5,000, which it's not bad, but you need to account for the fact that you will be staring at a chart and overthinking over that time. The only way you can manage to not overthink and overact on this trade is if you know exactly what you're doing, if you've done a bunch of these trades. The best thing that you can do when you're in a trade waiting for something to happen, the best thing you can do to keep your hands off of that trade is to backtest more trades. Just backtest more trades. Put your attention to that. Trade, right? Do stupid shit, but do it on a backtest, right? And the result here was $4,000 1,949.47. 949.47. And what I'll do here is I'll have a running P&L. And this running P&L is just gonna be a running P&L. So that way it's gonna calculate it from us. So the next thing I'm gonna do is I'm just gonna do the running P&L and it's gonna calculate us the profits. All right, conditions for entry, MA crossed, no other aspects. Okay, TP set Y based on strategy, top of closest range, middle, which is TP2, middle of range, just TP1, and then next range, which is TP3. The thing here is that, note, TP levels seemed to be set too low. Price moved much higher without us capitalizing. In fact, the full exit itself was higher than our TP levels. Stop loss set Y invalidation, validation of our trend moving to other range since we are trading a trend following strategy. Note, stop loss could be trailed either with a stop loss to break even at TP2 or a trailing stop loss between ranges. And honestly, the result would happen, I've kind of noted it here. The only thing I'm gonna add in, good question. I'll get to it later. Result, highly profitable trade, theory played out by the book, capitalization of profits subpar since we did not catch most of the move. SL management was inexistent, if that's a word. Okay. Here we go. I'm getting destroyed by mosquitoes right now. All right. So this is trade number one, right? This is trade number one. Now we're going to do the other trade. And we do this 20 times, right? Now, I was explaining a lot, but once you get into a routine, you can probably do a trade every 5 minutes. And, based on that, it's going to take you 100 minutes to do 20 trades, which is not that bad. It's under 2 hours. We'll keep going, though. But to answer your question, if we're seeking out news that may contribute to overall direction, so this comes back to, I encourage you to watch a video. I'll send it to you. It might be the first video in the challenge. If someone remembers, let me know. But when we covered news, right, it's either the first or second video in the challenge. And essentially we talked about the underlying market theory, right? How does a market work? Some people make money, a small amount of people make money, a large amount of people do not make money, right? When a news article comes out, who is it accessible to? Everyone, right? So the vast majority of people, meaning the people that are supposed to lose money, right? So any news article that comes out has been put there for an exact reason, to trigger the exact reaction that you have right now reading it. And with hopes of triggering the action and going into the market and doing something, right? So when a news article comes out, institutional traders are already positioned and you're just fueling their move. And it's actually very interesting, the turtle strategy. That's not here right now, right? But we've been developing it, and like that. This was a bit over a year ago, and we were developing it. And there's a lot of stochastics going on. This dashboard came essentially from that turtle strategy, where we look at specific movements in the stochastics and then difference in the movements in the stochastics. So essentially, we're predicting where the stochastic is going to go based on the difference of the stochastics, right? So if you take any line, this goes back to math. If you take any line, right, you take the stochastic line, the first derivative of that is the difference, right, is the displacement, and then the second derivative of that is the acceleration, right? So we're looking at the curvature, right, of the stochastic and the acceleration, how much it decelerates or accelerates, and how that acceleration is changing. And based on those numbers, we can predict if the stochastic is going to turn up or turn down, right? And you might say, okay, well, there might not be enough data on this time frame. If you go to lower time frames and you add that into this calculation, then you can predict it, right? So this is what we were doing. That's what the turtle is doing, right? It's the most profitable strategy that we have. It's been running for a while. And what's interesting there is that we knew, and we were trading on higher time frames. So we trade on like the 4, 6, 8, 12, right? So bigger moves. So it's very interesting that when we jumped on the 4 hour, for example, what happened was that we knew that a dump is going to happen. Like it was clear the stochastic is gonna go down. And we were just waiting. Like we were positioned. You can ask Alex about this. He will confirm. Like we were positioned, right? And we knew that we're just gonna range around, and in 1 to 2 days, we're gonna dump, right? The price is gonna dump. So we already positioned. We're fine. And 2 days go by, and guess what? A news article comes out about, I don't know what the fuck it was, like some Bitcoin ban or something like that, and the price dropped, right? And it happened many times where we were expecting a move, and then a news article comes out, and then the price moves, and the price movement is, people justify the price movement because of the news article. People that got, destroyed on that trade would say, damn, I was right? I was right too long, but fuck, this news article came out and, it destroyed me. But, if that news article wouldn't come out, then I would be right? And then they just keep trading. If they just lost their account, they would just reload their account. But what happened was we were literally positioned and expecting that move to happen. And then the news article came out. So it's clear that the news articles come out for the mass to read it, to trigger some kind of action. And this is specific to trading, but can you extrapolate it to other situations? Probably, right? But that's, beyond the scope of this entire Discord, right? But yeah, so that's to answer your question about news. If you have news, the only news that I would act on would be insider info, right? Which in crypto, by the way, still kind of use that. So I didn't, not financial advice, disclaimer. So just saying that if it's news that's publicly available, then you would probably be good of doing like the opposite. Not within the move, but after, like, huge Bitcoin crash news event, right? The price dumps, that's when you buy, right? After the dump, not before the dump, please. All right, so that was trade number 1. We just crossed, we made a bunch of money. Trade number 2 happened again because that's our rule. We will short here. We'll put our stop loss to the top of this range, right? And again, we did not change anything because we have only one trade. There's no statistical relevance. Top of the range is here, as I see it. Next range is here, as I see it. So I'm gonna put it here. You might ask me, why don't I put it here? Well, because I'm sticking to a strategy that I set at the beginning, right? That's the only reason. Now we have tight TPs, but that's what we will start trading on. And then, if we can justify over a longer period of time, meaning over multiple trades, that our TPs are too tight, we'll move them up because we have statistical proof that that's what we should do. All right, let's get in with 10 trades and let this and let this thing run. Maybe I can move this a bit. And did we already hit TP1? I guess we did. Okay. This was very tight. I do see that, but we are not live trading. We're trading in order to understand the strategy. Okay, so we did hit TP1 and now we're reversing back. Note that if the MA crosses, okay, we almost hit TP2. Very close, but we did not yet. Okay, this would be like maybe we would have wicked, but I don't see it yet, so just wait. But this happens, right? And this goes back to psychology. Very, very interesting that multiple times I set the TP somewhere and it just about didn't get hit, and it took like multiple tries to hit that. What does that tell me? Like, why don't I just next time, right, after the next iteration, this is something that I will note into my notes, is that next time I can just move my TP a couple points up and I will hit it, right, twice. Okay, so keep going. All right, so now we definitely hit TP2 and, well, no, that's TP1 actually, right? Yeah, sorry. Yeah. Right, sorry. So we almost hit TP2, sorry. Not bad. And we did not hit TP2 yet. Would I justify this as a TP2 hit? No, sorry. All right, so there we go. Now we hit the TP2. 1, 2, 3. And we're almost at TP3. We're probably gonna break through this, I would assume. Here we go. 1, 2, 3. And now just let the last one run. Were the TPs too tight? Possibly. So now we're just gonna let this thing run until we hit a stop loss, or until we cross the MA again. I'm sure you guys are gonna be like, oh shit, I gotta trade the strategy. I mean, hey, do it. Do it. Don't trade it, backtest it. You know, if we collectively, and this could be another TP, right? Why did we not set it? Fuck do I know, but we didn't. Right? And honestly, it's also about having, you know, going, like feeling the pain, right? In not taking profits here. So you can adjust and do it, right? But these are the first iterations. So we're sticking to the strategy. But hey, if we collectively, you know, backtested the strategy together, all of us would do 20 trades, would have, you know, quite a bit of data to go off of. All right. Let's hit the exit finally. Motherfucker, come on. All right. Here we go. Excuse my language, by the way, but I don't care. All right. All right. So here's the move. Do not take profits here. And you know, as you can see, we're actually range trading here, which is interesting. But all right. So let's write this trade down again and then analyze it. So same thing. Entry was here. 2777 1.04. And oh no, 7760.06 by the way, and it was time was at the time was 16:45 May 30th, which is exactly the exit time, and the exit price is 7713.43. Right. That's 7713. 7713.43, and then the entry time is the same. Exit time, is it 16:45? Yeah, I think so. All right, Anthony, have a good one. Thanks for joining in. Hope you got some value out of this. I know that we're like way down the rabbit hole at this point, but like there's been like 20 calls before that, so I'll send you a couple calls, you know, like if you want to catch up. There's like one video. If you watch that 400% overnight video, I think that you'll get a pretty solid understanding. Saifa, maybe you can send it to them, or just send it into the chat if you're still here. Yeah, you're still here. Cool. Stop loss. I'm a bit slow, guys, because I'm talking too, but if I was doing this, I just put on some music, get some coffee, I just grind through this. You're relatively fast. Yeah, like you'll get there. 27649.58. 8 TP2 2756648. And then TP3 2718294. Full exit price was right here, 2714615. and the time 2nd of June, 6:15. 6:15, and then the result. Gotta check. There you go. Yeah, that's the video. Good job. And now the running P&L here is 8,665.67. 8,000. Kind of forgot the number. 8,665.67. 67, and now the profit here is equal to this minus this. All right, so we made less money on here, which makes sense because our TPs were very, very tight. Let's analyze it. All right, so our stochastics here, once again, interesting, right? Because our stochastics were bottomed out and then they topped out, and that was again the high of the range. Does it make sense to enter here? Maybe yes. Same thing on the RSI. Now we're starting to see a pattern, right? TPs too tight as well, starting to see a pattern. Something else we should be looking at? I don't know. Let me know. Condition for entry. Condition for entry. Our MA cross as per strategy. TP set. And now I can save some time for myself. Same as previous trade. Note, TPs seem to be too tight again. And we did miss out on a lot here. We did not look at the stop loss, but same thing here. We could, a stop loss to break even and TP2 would work for sure, and a trailing stop loss would work as well. Same as previous trade. Stop loss to break even at TP2 holds here too. Same with trailing stop loss. Profitable short trade. Note, stochastic as in previous trade were on opposite side, however turned into our direction later on, which happened to be the top of our range and a perfect entry if we would take this into account. And now I'll give you a hack here. What you can do, I'm just gonna do this because we're past the hour, so we only managed to do 2 trades, but we can continue on the next call. But once you're done here, what you can do is you can go to ChatGPT, and in ChatGPT say, I am analyzing this strategy. Please find commonalities and ways to improve based on my findings. And this thing is just gonna consolidate the information for you. Because if you have 20 trades, what I'm gonna do is I'm just gonna paste the notes in, and then I'm gonna paste the entire column in, right? Paste it in, enter. And now this guy is gonna give me the commonalities. So entry conditions were the same. And this is with 2, so obviously we can consolidate the data ourselves, but if you have 100 trades there, this might help a lot, or even 20. Right, you would get the areas of improvement, stuff like that, and now we can ask questions, right? So what can we improve on the TP and stop loss? What can we improve on the stochastic indicators? How can we use the indicators, right? So we can optimize the TP levels. The TP levels are consistently too low, causing potential profits to be missed, right? And this was, again, 2 trades, but, if it's consistent over 20 trades, then, kind of get it. Seems to be a lack of active SL management, very true as well. Incorporating stochastic timing. The timing of the stochastic in here could be better utilized. For instance, entering trades when the stochastic turns in your favor might enhance entry timing. And as we know, based on our call 2 days ago, improving your entry is a huge lever on your trades. So that might be, pretty big improvement in our strategy. Dynamic entry conditions, okay. For this we need more data, and the exit strategy might be too rigid, also true. And then, just the boilerplate bullshit. So, yeah, that's basically it. Really, we just managed to do 2 trades, but what I'm going to do now is I'm going to screenshot this. And because of that, I'm going to download this image. I'm going to send it into the Discord, and then we can just keep going, or you guys can keep going, right? I will send you guys this link. And you guys can just keep going here. Put into the resources, backtesting call sheet. Right? And yeah, so this is how you backtest your strategy, right? You're analytical about it, you're precise about it, and already after trading 2 trades, we know something about the strategy, right? 2 trades is not significant enough. We need to trade much more in order for us to say, okay, this is a strategy that we could trade in a live market. Absolute minimum is 20 trades. I would at least do 2 times 20 trades on 2 completely different periods of time in the market. Like one could be 2022 and one could be 2021 or something like that. So you distribute the info that you get, or the data that you get, as much as possible. So yeah, that's basically it. Our hour is up. If you have any questions, ask right now. Otherwise, we'll discuss it later on in the Discord. I hope this made sense with the backtesting, and the replay feature really is great. If you don't have the premium on TradingView, I know Hans, you were using something, some other software that had it. I don't know if it was paid or not, but what you can just do is like set up some account, or like just get a credit card, do a free trial on TradingView, and then just block the card, or cancel the trial 1 day before the card charges, something like that, and you'll have like 1 month of free backtesting. Like, it's literally for free, right? And then later you can just do another email or something, like just figure it out, right? This really shouldn't be the reason why you don't backtest the strategy, because you don't have the replay function. Like, just figure it out, So, yeah, that's everything from my side. If you guys have any questions, let me know. Other than that, I'll see you in the Discord. And let me bring Hans in right now.
Yo, what's up, man?
What's up?
Yeah, I use a Ninja Trader 8, but that is a paid platform. But that has the market replay. But yeah, like you're saying, like just spoof a card up so you get the trial.
Yeah.
Back testing.
Like if that's what you gotta do.
Yeah, right. You're suggesting to take data from like 2 different years to kind of have more information, as in like different. Obviously, market conditions matter with the strategy. So that's what you're saying. Like do 10 trades in 2022, do 10 trades in 2021, just to get an idea.
Yeah. So because if you do all trades back to back, then you're risking the fact that you back this thing in a very specific market period or market behavior. That's not the case right now, or that's the case right now but will not be the case tomorrow. So if you distribute the time when you test, you're much more likely to test during different market behaviors, which I guarantee you the strategy is going to behave differently.
Okay. Word up. All right, cool.
Because this strategy, for example, like this will, like in a range, it will do well. It will not do well. Let's just see. Maybe we'll find a time. It will not do well during times when, like here, when it's like chopping, And this is something that we didn't cover because we didn't go through it. If we would have appeared, then we would cover it. But these times where it chops a lot, you will need to find a way to handle those. So if
you added the stochastic and the RSI
for confirmation, because I was assuming that they might help, which kind of seems to be the case, right? Not as I thought that it might be an immediate confirmation, but we can trigger the cross and then wait for our stochastics to bottom out and then enter, and we'll get a much better entry. So we'll basically minimize our risk by a large amount if we do that. That's in this case. Like the stochastic and RSI, they're like good timing indicators, and also directional indicators. Depends on how you use them. That makes sense. All right, guys. All right. If you guys have any other questions, let me know in the Discord. That's it from me. And I'll see you in the Discord on tomorrow's call. I'll be trading with Cypher for sure. Cypher's gotta make me some money so I can go get steak tomorrow. And yep, that's it. I'll see you guys in the Discord. Bye-bye.
Yo, my bad, bro. My wife called me.
Oh, no worries. All good.
All right. So so you're using the stochastic to get a better entry.
Yeah, in this case.
But the cross is the trigger.
Correct. So you would wait for the cross, and then when the cross happens, then you wait for the stochastic to top out or bottom out, and that's when you enter. But this is still a theory. It's not validated yet because we only looked at 2 trades, right? If we see this consistently, if we see this in 15 out of 20 trades, if that's the case, then we can probably do it.
Okay.
So
I'm understanding here from like when you were explaining, like obviously there's no trade management yet. Like you want to just run through just the fundamental of the strategy and then start to add these layers.
Correct. Because before adding the layer, I want to see that that layer is viable in this strategy, right? So at first, I just want to get a feeling of the strategy, so I'm not putting any constraints on it, right? And then as I do, you know, because if I did at the beginning, then I might miss out on, you know, an angle or situation of the strategy where that I otherwise would have seen if I wouldn't put constraints on it. So it's important that I don't put constraints on it and see it play out, and then by understanding the strategy, then I can put, you know, then I can make an informed decision and put constraints on it that will help me consistently, because it makes sense to put them there. Not just because I've seen the past trade, but because of I understand what the strategy does and what the constraint does. And, you know, I have a theory that based on those two things, and then I prove that theory by backtesting it. Right?
Okay.
So when you look at it like this, when you look at it scientifically, then it becomes so much easier to be consistent, you know?
Nice, okay. And then eventually, like, I guess, like I know I'm gonna get ahead of myself by saying this, but like, the end play is to kind of code the strategy with the rules and logic, so it can run in the background essentially, so you get that rules figured out.
Yeah, well, that's ideal, you know. But like, even if you want to have it manually trading, you can. But even then, you need to have a specific rule set, you know. Like, it doesn't have to be like as specific as you would in code, but you still need a specific rule set, and you still need to, you know, look at a lot of trades to make sure that you actually understand what's going on. Because if you don't, then you're too volatile. You just are, you know. Like, that's just a fact. Like, I can look at, you know, any like any account and a trade history of that account. And, you know, if it's too volatile, like, you will lose your money. Like, it's not, it's, like, it's literally a mathematical fact, you know?
Gosh,
like, if you have a line, like, you can probably ask ChatGPT, it will literally simulate it for you. Like, if you have a line and you give it a volatility, right? So every single point or every single tick, it can move X% either up or down. And then you ask it, okay, what is the chance that over the next 1,000 ticks, it's going to hit 0? There's going to be like an 80-90% chance. You know, like, it's just going to happen. Like, literally, scientifically, it's going to happen. So that's why it's so important to be consistent in these, going through 20 trades manually, going through 100 trades manually, increases your consistency and your chances for success, like, dramatically. You know, that's why it's so important, at least in my opinion.
Word. Okay, then let me take that information, bro, and apply it then.
For sure, man. Amazing.
But all right, bro. I'm gonna bounce here. I gotta put my little guy to sleep here.
All right. Sounds good.
Thanks for the info, bro. You guys are gonna update that Excel sheet, or?
I already sent it into the resources.
All right, sweet.
Cool.
All right, bro. Thanks, man. I'll see you guys.
All right. See you. Bye-bye.